So you want to know what's happening in the real estate market now that we've gone through half the year. And is it a good time to be waiting, or should I get out in the field and find that home or sell my property and make that change? Well, as you look at this month's edition of the National Housing Market Update, we will cover all that and some while giving you the mid-year review and a better understanding of the past, where we've gotten to in the present, and most importantly, what the experts are predicting for the future. And most of the news is not necessarily good or bad. It's just normal, meaning what real estate typically does in more normal markets. And however, as consumers do a ton of research, many of them are saying, I also need advice though, because the research that I have has led me to where I am. I just want to make sure I'm making the right decision. So thank you as always for keeping current and spending time learning with me, Justin Martin. And as we look at the last couple of years, it's been challenging from health, economy, and life. And as you look at a great quote from Vince Lombardi, says, confidence is contagious, so is lack of confidence. So the goal that I always have is to help you be more confident in your decision making. And the last couple of years, we experienced some unicorn years in real estate that just led people to do what everybody else was doing versus now making decisions for myself. And as you look at what I talked about in the news, is that for most people, uncertainty is what leads them to lack a decision. And as many people are either making a decision right now in real estate, taking advantage of the market, or they are waiting, is sometimes waiting is good, sometimes waiting is bad. However, some people don't know quite how long or why they're even waiting. They just are. And as we dive into the mid-year review, we'll look at 2023 housing. The good news was housing is normalizing after two of the unprecedented unicorn years that we've been talking about. So people can stop comparing to what was happening with housing then. A return of seasonality, which is a welcome sign. It's more predictable. And prices are rebounding from the correction we experienced last year. A reality check is homeowners have limited options between rates and inventory. They just are what they are, and there's a lack of it. New listings are still declining. Affordability remains a primary challenge. And as we look at the outlook, though, future is new construction is growing. It's offering more options for buyers and sellers, and expect a moderately active summer season, meaning the competition should not be too steep. So the good news, or let's just call it what has happened in the past 6 months, is the buyer demand has returned quite a bit. And as you look at really 1 out of 6 people are saying that they're thinking about buying or selling in the next 6 months, that's a good number to better understand, not a dramatic number that everybody is thinking about doing it, but just 1 out of 6 is in the position to make that decision. And that's why we're here, is to continue to help you when you are that 1 out of 6 at some point in your life. Now, other good news, like we were talking about, is the average credit score in the U.S. has become more healthy. If you look at 2010 to 2022, we've gone from 689 to 714, and the credit score for housing borrowers is 765. This is what we've been talking about around the overall challenges to get a home and why there's not a lot of promises for foreclosures or defaults. Is the people that are buying homes, it's more difficult for them. Established and good credit, and those that are carrying a mortgage have the ability to repay it and or finding ways to ensure that it is paid. Now, the new normal, and why last year was a correction, is we saw such an extreme change in mortgage rates. And we're, as you can see now, from October all the way through June of this year, is that mortgage rates have stabilized somewhere between the 6 to 7%. And that is what has led a lot of people back into the housing market, is they have just accepted that this is the affordability. And instead of saying, I'm not going to buy a home, they're just looking at how can I make buying a home more affordable. As you look at the Lawrence Yun, chief economist of NAR's quote, mortgage rates heavily influence the direction of home sales. Relatively steady rates have led to several consecutive months of consistent home sales. And all that's saying is that when rates are volatile and they keep going way up or way down, many people are taking a longer period to adjust to that. Whereas when they are steady, more people become adjusted, and like we said, make adjustments to their living situation to still accomplish their goals of home ownership. Now, the existing home sales being steady, as you can see here, over the last several months, that number has been somewhat steady in the amount of homes that are being sold. But you could see from January of last year that decline throughout a good period, which was where we experienced a correction and where some places experienced home price depreciation. But overall, we rebounded quite quickly. And as you look at month over month, we've been increasing the amount of homes that are being sold, which is a great sign or indicator. The average amount of homes sold from 2014 to 19 was about 5.3 million. So you can see at about 4.3 million, we're just about 20% less home sales than a normal seasonality. So again, what does that mean is, well, if there was a lot of inventory, that might propose a challenge to pricing. But as you can see, as we go through future slides, the homes that are highly desirable are, again, the price point of a more traditional starter home, 250 to 500,000. But then also, as you look at just a little bit under that and a little bit above that, is the bulk of where all the homes are being sold. And as we continue to talk about inventory, available inventory strongly impacts home sales too. Existing home sales activity is down sizably due to the current supply being roughly half the level of 2019. So those home sales, part of the problem on why they're down is because there's very little to no inventory. So as you can see here, 2011 to 19, the average months of inventory is about 5 months. Remember, anywhere between 4 to 6 is a neutral market, and we are still at 3 months of inventory. This is what continues to show the law of supply and demand, and a lot of experts predicting that home prices will continue to rise as long as demand has stabilized, which we have continued to see that happen. So dramatic rise in home prices like you saw the last 2 years, no, but if you look at those last 2 years in the lines in the blue graph, that was extreme lack of inventory. Some areas getting down to as low as 0.2 months, meaning that if nobody decided to sell their home within 1 week, there'd be no available inventory or a home to even purchase. So very crazy times. That's why we called them the unicorn years. And now we're just getting back to measuring more typical years. So as we talked about, supply improves but remains limited. You can see Realtor.com said there were 7.1% more homes for sale in June compared to the same time of 2022. So at least there's more than where we had last year. This means that there were 41,000 more homes available to buy on a typical day this past month compared to 1 year ago. However, the inventory growth rate for homes actively for sale continued to slow for the 4th month in a row. So as you can kind of see here, we were seeing that increase in active listings and availability, but that was really due to a big pullback of demand because of the big adjustments to interest rates. That was the correction that we experienced last summer. And so now, unfortunately, we're just seeing a very stabilized market, but not a lot of inventory or active listings available, which would neutralize or potentially bring home values down. As you can see, the number of homes for sale in June of 2023, monthly active listing counts for last year and pre-pandemic, 2017 to 2019. You can just see that overall the number of home sales are up, but dramatically different compared to where we were pre-pandemic. And overall, in the final week of June, we noted that inventory actually declined on a year-over-year basis for the first time since last April. This substantial slowdown was primarily driven by fewer sellers opting to list their home and more demand that came to the market. You can see the active listings greater than new listings for 13 months in a row. And this again is why we call this a supply strained market. We just do not have enough people listing their properties. And until that green bar graph increases quite a bit, as long as the demand remains, we'll continue to see the constraint in supply. And as supply demand would order, that home prices will continue to rise. Now, as you look at in June, the number of homes newly listed for sale declined by 25% compared to the same time last year. Overall, what this is really just stating is that we are short on options for buyers to purchase today. However, because there's less buyers out there, they have more opportunity to purchase with less competition. So as we continue to look at new listings now below previous years, this is just again showing that there are not a lot of people that are choosing to list their property. Now that's for several different reasons. As you look at, some people are in a 2 to 3% interest rate, and while interest rates are at 7 to 8%, they will just choose to remain in their home. However, as we know, each generation, there are many people who don't own a home, and are looking to purchase. And there are also those that it's not just an interest rate that keeps them in their home, it's major life events that lead them to want to find a new one. And as you look at Tom Barkin, President, Federal Reserve Bank, I didn't fully anticipate how much the move in interest rates would convince people not to put their house in the market. There's a lot of people, but if you look at the top 200 metros, new listings are down in 99% of the country. So what this is just saying is that there's not a lot of people listing. So where is the opportunity for sellers right now? Is a great time to sell is when there are less available listings and less new listings to compete. So for those making choices, not just based off interest rates, but making it based off life events and capitalizing on the market, you could see it's not really like good news or bad news. It's just the normal market news based off what's happening all across the nation. And so history has shown that higher rates may take the steam out of rising prices, but it doesn't cause them to collapse entirely. This is especially true in today's housing market where the demand for homes continues to outpace the supply. So again, as we're continuing to provide a past, present, future mid-year review, a better understanding of how well home prices have rebounded and how that's reflecting the market dynamic. And so obviously, as you can just see, as rates went from 5.5 to 7%, buyers continue to see not necessarily a crash by the list price of homes. As you actually can see, the price of homes listed have continued to increase. And as you look at January 2023, we saw a 3% month over month, 1% year over year in overall home prices. Now, that's the price of new listings that are listed. And the big surprise is how well the demand has stabilized to home prices are continuing to rise, looking at the median price of new listings. And right here in this monthly median listing price, you can see listing price growth reflects market and return of seasonality. We're talking about it. Typically, July is the peak, and then we start to see a subtle change. As you can see in comparison to last year, the median price is $445,000 for new homes that are listing compared to $449,000. But if you look at that number compared to January of 2022, that number is up almost $70,000. So as rates skyrocket quickly, we can go through a correction like we experienced last year, but due to the lack of supply and the overall demand for housing, just when you look at those inventory levels, is that they correct and stabilize. This one just corrected and stabilized quickly in a matter of about 6 months across the nation. And you can see that in here if you're not taking the median price because of the fact that, when more expensive homes stop selling, but you can take indexes like this and say, well, where are we at on a monthly appreciation? As you can see, February, March, and April, we're seeing some good levels of appreciation that would lead to somewhere around 5 to 6% over a year's time frame on the current prices of homes today. And so if you're trying to make a case that the decline in home prices that began in 2022 had definitely ended in January 2023, that data for April only points to 90 days worth of home price appreciation. And so very, very true and warranted. And as you look at, the home price expectation rebound, the consumer expectation, many people are starting to see home prices appreciate, and the rise of new construction is helping offer more options, meaning new residential starts jumped 22% in May. So as you can see, from 1960 to 2000, we needed about 1.5 million, new starts. As you see back in, up leading to the crash of 2000, 2007, we saw a spike in new starts, which also led to that market correction. But for, roughly almost 11 to 12 years, we have seen a dramatic low amount of starts. But we do see in the month of May, finally a jump in new construction and builders saying, I want to get back into the game of building. And you can see most of that is single family compared to multi-unit. And the South is where most of this construction is happening. As you look at the Midwest and West, and the Northeast is just lagging for different reasons and or indicators around starts and new build construction. But overall, new residential completions, you can see again, we're starting to get back to that healthier normal line. We have many years to make up for, but again, these are all just signs of pointing towards a stabilized and healthy housing market moving forward in the future. Again, those single family housing completions are predominantly single unit. You saw the starts, there were more 5 units or more, as for many predictions that we will move into affordability crisis for many people who do not take advantage of owning their first home or owning a home. They may have to rent multifamily, but the desire for single family will always remain and continue to drive up the prices of those homes based off supply and demand. And if you look at this outlook, obviously home prices continue to show stronger growth than what was previously expected. The housing performance is a testimony of the strength of demographic related demand, meaning in the face of baby boomers aging in place, Gen Xers locking in historically low rates, both of which help keep housing supply at historically low levels. Home builders continue to add that supply, but years of meager home building over the past business cycle means the imbalance will continue for some time. We do expect housing will be supportive of the overall economy, and that is something that is very good for many people who are looking to buy, who already own, who are looking to invest, as we know that when we enter recession, which can impact people's lives, the first sector that leads people out of it is real estate, and that's always a good sign for home price appreciation and the potential lowering of mortgage rates. So the mid-year takeaways, good news. Buyers are active as housing is normalizing, prices rebound. We talked about the reality check. Affordability remains a challenge, and homeowners have limited options, but new construction is starting to show, which is a great confidence factor for many people. And with the rebounding prices, homeowners ready to move are in an amazing position to do such. And as inaction breeds doubt and fear, action breeds confidence and courage. If you want to conquer fear, do not sit home and think about it. Go out and get busy. And that's why I appreciate you listening to our housing market and continue to learn. It's not about timing the market. It's about spending time learning about it. And I hope that this kind of blast through a mid-year video helped support you. Thank you if you watched all the way to this point. And as always, if you would like to schedule a consult or a strategy session, I'm always happy to help and look forward to pointing you in the right direction if you're headed anywhere else in the nation, with pointing you in the direction of the top 1% of agents to help you advise you along the way. So until next month and the beginning of the month with the local first to know, keep current. And as always, stay learning about the real estate market to help you with your decision making. Talk to you soon.